Yeah, so what's up, people? Welcome back to the program. As you can see, I'm on the other side of my office because the computer in my office seems to be wigging out. I'm just trying to, I don't know, do anything I can to prevent from what happened to me yesterday. So, I told you the rage would come pretty soon. I'm already pissed off because a few weeks ago when I realized, or when everybody realized that we were ignoring bad news, and that's a good time to be buying stocks, I got into a bunch of stuff, but conservative, wanting to take the profits kind of guy that I am, I sold everything. So now I'm caught in a vortex of knowing that the market probably is going to go a little bit higher from here. I don't know where it's going to stop. We could stop today. I figured it would go up yesterday because we were gapping down. Bull markets like when the bull moves, like when the market comes, starts down and starts to rally and get stronger throughout the day. When we gap up, when people are looking to buy, generally we fade the market and then see where it takes us from that point on. Now we're looking at stocks, okay, and I'm always talking about the same handful of 20 stocks. And a lot of these stocks have gone up 100%. So why, in my right mind, which of course, that's prevented me from making money in the past. Why in my right mind? How could I possibly buy GTI, a stock that I had gotten long at 20, bought more at 15, bought more at 10, bought a shitload at 6, then scared out of my wits, my life was on the line there, loaded up at 4, and then when it got back to 6 and 7, I started piecing out of it just so I didn't take a 30 grand hit. I managed to only take, I think, a 3 grand hit. So in theory, that was one of my best trades ever. And how could I buy that stock now when it's back at 10 bucks? Because I'm thinking if it goes back to 5, I'll buy some. But that's exactly where we are. Everyone's looking to buy. Everyone's looking at where the stocks came from. Everyone's looking at where the stocks bottomed out. We'll call it a bottom for now. One thing that's good is you could be looking at stocks now and where they came from and use those bottoms as your outs. Granted, we're looking at stocks now going down 50% from where they were as your out if you're looking to invest in the stock. We're talking about a Chesapeake Energy. Here's a company that, if we're looking at an $80 stock and it went down to 10, at 10 bucks it was like they were going out of business. And all the prices that I'm talking about at the lows, those were the prices where you thought the companies were going out of business. Okay, that's when you started second guessing everything you knew about the company, anything you've read, and the future of America and capitalism and all that was done. The revolution was on. We were about to hit the streets, running through with fate, war paint on, stomping, and accumulating weapons and canned goods. Those were the prices that we had in late November. Those are prices I'd have to say maybe we won't get back down to unless we start crashing again. Because if we go back to those lows, like when GTI was under 4, and Gyres was $4, and Chesapeake was 10, Morgan Stanley was 10 bucks, those are the prices of Armageddon. I don't know if we're going to go back to those Armageddon prices. But at the same time, even though this morning I woke up and I told my wife, I was like, oil's going up again. Oil's going up again. And I refused to buy it. She's like, why don't you just buy it if you're so convinced that it's going to go up? Because I feel like I missed the boat. Now we're in the midst of this vortex of pain, fear, and greed. You don't know what to do. I don't know what to do. That's why it's always best to be a trader. Because as much as I want to just hold on to some stuff, I don't want to get caught in some more, stocks where I got to go trade my way out of a loss like I had to do last year. I'm just going to try to remain calm and look for the stocks that I still think have some more upside that haven't become ridiculously overpriced. I say overpriced, which is insane to say considering where the stocks have come from, but we don't know. The DRYS, for instance, okay? The stock was 120 bucks and it went to 4. So somewhere in the middle of all those prices, there is a fair value. At 4 bucks, it was as if they were going out of business, which at the moment, they said they were running out of cash. They didn't know if they were going to survive, so there was a good shot that they were going out of business. So why would you want to go near that? Such the same thing was with a lot of different companies. Morgan Stanley is the one it's my financial choice because it's still relatively cheap. It's only off the lows, I think, by 80%. It's only up 8 points. I think that stock bottomed out at 10. Let me just check quickly. But that's what I'm looking at. I'm looking at stocks that, okay, that stock was under 10. Okay, so it's only up 80%. I'm looking at stocks that haven't gone up 100% yet off their lows. Okay, and I'm also looking at stocks that if I do get caught in a position, I feel that the bottom is in, and then any significant pullback won't be to those lows, and I could be able to handle that if I get caught in a position, because I know how I trade. What's a $300 loss? I'll say, all right, I'll hang on to it till tomorrow. We'll see what happens. Usually, when I say let's see what happens, nothing works out for me. But at least I'm in a company that I know has made some sort of bottom and there's a bid there, like the Hartford Financial. The HIG has been trading really well. I've been buying it on dips, and that stock's been going up. Same thing with the Chesapeake, same thing with the Morgan Stanley. It's been trading well off these dips. Now, what else are we looking at? I'm looking at, well, this morning, let's just talk about this morning. It's going to have to come to a halt. I mean, I think we're still going to trade with, the market seemed to be trading with a little bit more rationality. So when we were going up, we'd have some pullbacks. And it wasn't going up straight. We had a couple of days where they were down. So today that the market's gapping up, I'm looking to play the fade here at the morning. What I mean by that is we want to short the open, look for the market to come in, close that gap, and then see where the market takes us from that point on. If we start to reverse back up, you want to get long and start going crazy long, because these are the days to make some good money, because these are the days where we're having some good action. We might have to consolidate these gains for a while, which becomes that choppy, annoying action where nothing's going on except pain and suffering. But as for now, like I said, and the USOs, they're going back to 45. They're going back to 45 because that's where I took that loss. They were down at under 30, and I was thanking God that I got out of them. I traded them twice under 30. Last trade was out at 30 and a quarter. I told everybody to get into the USOs at 30 and a quarter. I told everybody to get into the dries because I gave up on that stock. I gave up on that stock, but then once it came back and rebounded and got back over 5, I was like, I'll give it one more shot here at 5. 300 shares at 5. See, again, we're not talking about big positions. That's why I've been making money lately. 300 shares at 5. I put it out at the next strike price because I like doing that. I sold it at 7.5. Now the stock's at $15. How could I possibly buy that stock? Even though I think it probably could go back to 20. It could go back to 25 just on the short squeeze alone. And also the fact that people are so skeptical. You want to go near. You want to trade stocks where people are thinking that they should go down, because the market always does what you think it's not going to do. It does what you think it's going to do. It never does what you think it's going to do. What did I just say? The bottom line is confusion. It's absolutely absurd. Like Baidu and Google. If the market's going to bounce, you want to just pile into those stocks. Don't look. Don't look. Because if you try to watch Baidu or Google while you're in it, you're going to lose money. Because as soon as you get into Google, you're down 2 points immediately. It'll rip down in your face just to shake you out. Same thing with Baidu. Same thing with most stocks. They'll rip down as soon as you get in to convince you that you're wrong. But if you're convinced that the market's going to rally, if that's what you're thinking, the only way to trade it is to get into your positions and don't look. Don't look. Don't look. Just put a stop on if you're convinced. You just look at your charts, see where you want to get out if it breaks down, and just do it like that. The only reason I made money yesterday was I bought some Baidu, and I didn't even keep it on my screen. I knew by the end of the day it would be higher. So I just bought my 200 shares of Baidu, threw it in a corner somewhere. As long as the market stayed strong, I didn't even look at it. Same thing with a lot of the positions that I had yesterday. It's a lot easier to trade with just 100 or 200 shares. And as much as I want to hang on to some stocks and the recovery, because some of these stocks, again, even though they're up 100% off their lows, they're still down 80% from where they came from. So in theory, they do have some room to go, but that's assuming that we're in a recovery mode already. Everything's all right. But this is just the lull, my friends. This is just the lull, and there's going to be nightmares to come again. But you know what? If we're going to keep ignoring the bad news, maybe we'll just keep ignoring the bad news until there's no more bad news left, and then there'll be only good news, and then we'll go higher, and you'll be like, wow, why didn't I buy stocks back in November and December and January? So buy some HIG, get that stock in 20 for me, all right? Because that's the only stock that I'm hanging on to right now. HIG. See ya. No music.